everybody. Give me 1 second. All right, let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure there. The only thing new is I kept a very small amount of JP Morgan, like very small, about as small as I can be. All right. Excuse me. Let's jump into the meat of it. So S&P here, SPYs are down 0.5%. We had a decent uptick from the close. We're down 0.5%, including this uptick after hours. SPYs have bounced almost $1 from where we closed. So market down. Qs, same deal here. Qs are 0.4% down right now, but they also are up about $1 after hours, 90 cents after hours. And finally, our Russell with the relative strength, still closed green on the day. Same deal here. IWM is bouncing, a solid 60 cents or so after hours. So at this point, it is positive 0.7%. If I'm blurry on the VTF at all, I've been having internet issues today, so the YouTube is probably clearer if anyone wants to post that link. I'm also live streaming on YouTube, which probably helps make the VTF blurry, to be honest. But all right, so let's talk about it. Relatively uneventful morning, which was kind of what we expected. That opening price discovery, there was a couple of good little opportunities that were worth trading with probably smaller amounts of risk. For me, I threw in the towel around like this 10.25 area for sure. We pulled back deeper than I felt we should have for the market at about 10.10. A little bit too deep if we were just going to pivot high and continue. But this really is just a 15-minute correction, so we weren't completely out of the woods yet. With this inside 5 and up, if that could have negated this 10 a.m. bar. I remember saying it when I was on the radio. I was like, the market needs to get back with the 10 a.m. bar. And we had inside 5 and up. We attempted to, but we couldn't do it. And then when this 10:25 a.m. candle came in, that basically led to a break of that low, then you knew that any possibility of a real opening upside bull trend from this market was just not going to happen. And that's when I threw in the towel for sure on my morning trading. So trading for me this morning was small, but it was fine. Things worked out okay. But once 10:20 a.m. came in, I had the signal from the market. 10:25 candle came in, or I had the signal from the market that really told me I need to take a pause. There's no trend coming into this market, and I also know that it's Fed day, and I know that it's very typical between 10:30 and 2. At the midday price action is just sloppy and choppy, and it's easy just to kind of rip yourself up on this if you're over trading. So I didn't do very much during the day at all today, during midday. Just waited for 2 o'clock. The expectation was 2 o'clock will get a lot of volatility, and if there is going to be a directional move, that would probably happen post 2:30. That's what happened. Though the first 30 minutes from 2:30 to 3 was really also just a continuation of volatility. So 2 o'clock hits pretty much exactly as expected. Thanks, Coffee. Coffee just posted the YouTube link if anybody wants to go over to that instead of being in the VTF. 2 o'clock announcement hits. It's exactly as we expected, exactly what we were looking for, right? 25 basis point increase with language hinting at a probable pause unless data says that they shouldn't pause. So again, pretty much exactly meeting the market's expectations and our expectations. And the way that you get real directional moves from the market tends to be more on surprises or when expectations are not perfectly met. So expectations are perfectly met. That means that there's a good chance we're just going to get a lot of volatility, but not have any real resolution to the upside or the downside. And if you look at that first 30 minutes, which really turned into the first hour, just a whole bunch of nothing happening here, right? Volatility really increases. Every time we pulled lower, we would tail back up. Every time we tried to move higher, we would tail back down. There was just nothing to really talk about. Paying attention to that 412 starting point for the SPYs, seeing if we're above it, seeing if we're below it, but they were just kind of shaking everybody out in every direction. So after about 15 minutes of that, just decided to hop off the radio a little bit. I went to actually make myself a quick snack, came back upstairs, and my internet had done one of these quick little 3-second drops. It was enough to lose all my orders, which was very frustrating because it wasn't properly set up for 2:30 when the press conference. Volatility increased. And you know what? I would actually say from 2 to 2:30 it really wasn't a ton of volatility, not compared to what we've seen on Fed days, previously. We always get some volatility. This is actually relatively muted. Even post 2:30, I know that the 235 candle gives a real big downside tail on volume. Then the 240 candle gives a really big upside tail on higher volume as well. This isn't massive. I guess 410.50 to 413.50 or so is a pretty big move over the course of probably 7 minutes here. But it's really the same thing. They're just shaking everybody out on both sides. Powell, from what I saw, I didn't listen to it. I was just going through the highlights that came from Pat. It looked like Powell was once again just perfectly meeting expectations across the board, just sticking to the script. And it was really the comment that we had from Powell around 3 o'clock when he was really questioned about the Fed rate cuts, where he basically said what I would expect him to say. Cuts, what were you talking about? We're not looking at cuts right now. Higher for longer. We want to get inflation down. That's our goal. And for the moment, the economy is holding in. There's still growth in the economy, and there's no reason to cut. So the market didn't like that, probably because the market's expecting cuts into the end of the year, which it looks like it still is. I know Bill had provided that Bloomberg, there it is at 322 in the VTF, the Bloomberg chart of implied overnight rate and number of hikes cuts that goes through to January 31st, 24. And you can see here that, it looks like we're pricing in like 3 to 4 cuts into the end of this year and beginning of next year, which I don't know. That's just kind of crazy to me. I really don't get it. I've been saying that for months as the market's been pricing that in. And, the market's always smarter than I am. So maybe the market is much more concerned about what this recession might look like, or thinks that inflation will come down much more quickly. But Jerome Powell certainly did not indicate that when he was questioned about it about 3 o'clock. And that, I think, is what really actually created the resolution of all the volatility to the downside. So we resolved down hard and relatively fast. And then that was pretty much it. The bears finally took control. I think we called it out, as soon as this 3:05 p.m. candle closed, that, oh, look, bears are in control. I think by the candle after that, I was saying that, there's no real way we should be able to get back above 412 technically at this point. Bears are in control, and they just maintain control pretty much into the close, although now we're getting a little bit of an after-hour pop. So that was pretty much it. No real surprises anywhere, and I think that's why we didn't get a move initially. And then the interesting thing, I think, to really continue to consider is Powell's language on cuts that sent the market down, with the Fed funds rate still pricing in these 3 or 4 cuts. That I gotta say, I don't understand it. So if anybody's got an opinion on that, I would love to hear that opinion, because I just don't get it. I don't see them cutting I don't even see them really even cutting if we're in a mild recession, which seems to be kind of the status quo when you look the status quo of expectations when you look at what the jobs market looks like right now, what employment looks like. I think Powell even said it at one point. I thought it was, a pretty solid bullish statement when he basically was like, there is the potential of us just having like a very light, maybe you see job openings come down. you see growth come down, but you know, you don't really see unemployment tick up. And what I've constantly been harping on for probably 6 months now, since the end of last year, when a lot of the big sell-side analysts started talking about, at that time they were saying a recession was going to happen in the beginning of 2023. Obviously, that keeps getting kind of pushed back. Is just totally lost my thought process. Sorry guys, I just totally lost my thought process. It's been a day. I'm distracted by something. But yeah, anyway, I'd love to hear opinions on why you guys think that the cut's coming in. Oh, I was talking about the recession being mild. And I would think that even in a very mild recession where, and what's the Fed mandate, right? It's employment and price stability. Well, if a mild recession happens, which I think is probably the highest probability at this point, but that mild recession is one where no one really loses their job. Well, if unemployment's still good, why does the Fed even need to cut on that? So, you know, the only way that they would consider doing it is if inflation, I think, comes down so fast that it gets to 2% or below 2%. But the numbers I'm seeing on that are all saying that doesn't happen until like early 2025 that we get down to 2%. So I don't know. For me, it's a complete conundrum that I just don't understand. The Fed seems to be indicating that there's going to be no cuts. I don't see logical reason why there would be cuts, yet the market continues to price them in. So again, the reason why I'm even talking about this is just because it seemed like it was that comment from Powell about, like, you know, of course we're not cutting, that is actually what eventually resolved this market to the downside. Let's take a look at what this means for our daily charts. SPYs, which I now can't get a daily chart of. This happened yesterday too. This is so bizarre. I gotta restart my computer. SPYs gave an inside day. The S&P gave an inside day, which is also kind of interesting. An inside day on a Fed day does not happen very often. I know the Qs and the IWM did not do it, but today's range is within the range of yesterday, which is impressive. We did lose 410 on a closing basis though, which I did not want to see. 410 has been a really important level for the market. We were looking at that level back here when we were in this, you know, very tight April range. We broke down on that the Tuesday of last week before big earnings began to hit, and then, you know, Google, Microsoft, Meta, strength on earnings reports was able to bring us back above 410. Then we were looking great, potentially testing the resistance of the breakout of the big picture, and that obviously failed with a big pullback yesterday, but we still closed yesterday above 410. And it's always the closing prices that matter most. And today we couldn't get that. Today the market was looking pretty solid, you know, all day, kind of holding in, small green, even, you know, for the first hour post 2 o'clock, just still within that range above 410. And then eventually we lost that 410. We closed below it. We closed at 408. So I think 410 is still a spot to pay attention to. But overall, the SPY bull trend is still technically intact. Same thing with the Qs. Not great to have a close on lows for the Qs, but there's no technical damage that's been done to this chart. The issue continues to be this IWM, which I'm disappointed about for the second day out of 3 trading sessions. 2 trading sessions ago, we were looking at that key 176 level. The IWM had amazing relative strength pre-market, was above 176, was holding in great as the SPYs and Qs were kind of consolidating, and then it rolled over to fail and close below. Yesterday was obviously a really weak day. And then today, for the second time in, I guess, 3 days, I was pretty excited about this IWM being above yesterday's high. Right, because you had this, and I spoke about it briefly in the morning meeting, more specifically with the SPYs, that, you know, while the SPY trend and chart pattern is still fully intact here, yesterday is a day to take note of. And what bulls need to do is they need to negate a day like yesterday. Higher volume day that's a little bit of a breakdown candle, even though we did close above 410. You need to negate that. You need to get above that high. And the IWM was the one that was doing it. You can see on the daily chart, the IWM has this tail above yesterday's high. So that actually had me really excited. Going into the Fed, we just had a really strong IWM in the morning. Similar to the other markets, post 1020 just got really slow. There was nothing to do. We had this upside grind going into the Fed. And then even when the Fed was out, the IWM was showing a little more muted volatility compared to the SPYs and Qs, but also kind of consistent relative strength. It was really just with a lot of tails, kind of continuing the upside grind that it had going into it. So I was like, oh, well, this is great. You know, if I can get an IWM close above, again, I really need to close above 175.50 to 176. That's most ideal based on the daily chart. But it'd be great progress if I could just get a close above 174.50 today, because that negates yesterday's kind of breakdown candle. And if the IWM wants to do that, but the SPYs and the Qs don't today, I'd be just fine with that. I'm still trying to see if I can get some big picture mean reversion where the IWM can catch up to these SPYs and Qs a little bit. So far, it hasn't been able to happen. Breadth has been very poor. We're aware of that. You know, what was that chart? The spread between the market cap weighted index of like the SPY versus the equal weight index of the SPY is the third largest it's been going back to 1990. So with the SPYs and Qs, I want to take a little bit of a further rest within their bullish daily picture range, but the IWM wants to have that relative strength, wants to play catch up and recapture some key levels, get back above yesterday's kind of breakdown type candlestick, and potentially even get back above 176. I mean, today's high today is 175.70. We almost went after it. That would have been extremely productive for bulls if we could have gotten it, but we didn't. The market broke down post 3 o'clock on that Powell comment, and that's where we're at. So overall here, not too much of a change on the big picture for the market, at least not yet. SPYs are still overall technically bullish, but yesterday/today are a couple periods of weakness that are worth noting that could potentially lead to a breakdown of the bullishness of the market. Qs, same deal. Qs are still very healthy, very intact, very bullish, though maybe we need to take a little bit of note of the weakness over the course of the last couple of days. It's the IWM that is still this problem. Below 176, which is a key, and below 180, which is the really big key level where I think that the Russell can go from being a little bit more neutral to actually getting bullish again. So a lot of work needs to be done. We were almost there for the IWM and it didn't happen. Only other thing I would mention, I guess, about today going into tomorrow is that it is very typical that not 100%, because no 100% in trading, but it's very typical that the day after a Fed day is a trend day. So the day of the Fed day, is robots gone wild. The robots are wilding out all over the place based on, scrubbing news and trying to jerk the market higher and lower, and we certainly saw a ton of that today. And then, again, sometimes you do get a resolution higher or lower, which we eventually had to the downside. But really, in a lot of ways, it's the day after the Fed that becomes key. A lot of the big money managers are not making impulse decisions at 201 and 231 based on the report and based on like one comment that Powell says. A lot of money managers, they want to take the evening to digest what happened, digest the information, and then they really put their money to work the next day. So that is why it is fairly typical, again, not 100%, but we've seen it a lot over the course of the last year and a half, that the day after a Fed day becomes a major trending day. And at this point, I would almost do a coin flip. If we get a trend day tomorrow, I think you could almost coin flip on which way that goes. Obviously today we ended up resolving to the downside, but the market could flip that again tomorrow morning. We're already bouncing a little bit here after hours. SPYs and Qs are still bullish on the big picture, but we could also just get continuation of the smaller time frame weakness that we've seen over the course of the last couple of days. So I know coin flip's not what we want, but you don't really get an advantage on a coin flip, but we can be prepared for the potential of a trend day tomorrow, and as we're seeing it potentially unfold, we could try to take advantage of it. So that's everything I've got from the big picture today. I don't really have anything to go over from the small picture from individual stocks. I would note, I should have said this already, Pat is doing the Conversations with the Pro Trader interview on LinkedIn that is starting at 5 o'clock. So I definitely want to make sure I'm off by like 4:50 today so I can be properly prepared to tune in and get Pat's opinion on everything that happened today. But yeah, smaller picture. I don't really have too much to talk about. You know, there was a few potential trade ideas that I had for my list this morning that I very quickly kind of axed after the market opened. And again, you know, just worth kind of going over my process a little bit with, you know, what I do pre-market versus what and how I trade. I do a ton of research every day pre-market. You know, I think everyone should be. It's really important part of success in trading. So you know, I do all that research and I kind of come up with my list. I come up with my list every day on what I think is interesting, but I have no idea what things are going to look like when the market actually opens. I'm basing all of that thought process and decision on the daily charts, maybe a little pre-market action if there's a lot of volume volatility, you know, real trading that's actually happening in the pre-market, as opposed to, you know, most stocks are just super liquid and don't actually have any trading. How we're set to gap, where I can find news, and, you know, try to kind of create a list on a day-to-day basis. But if I have a list of 10 potential things that I'm looking at that I'm interested in, there's a good probability that I only end up actually trading a couple of them. That would be, you know, very typical, because there's a lot of things where once I get to actually see that opening price action, I can kind of say a little bit more, you know, this doesn't look right to me for the following reasons, and I'm going to take it off my radar. So I remember I was looking at Chewy directly off the open for $32. And 32 did continue to play out as a little bit of a level. They sold it right off the open. This probably would have been a little bit of the better trade, and I do like that trade sometimes, which is the price correction into the ADMA. I just don't typically like it when the first bar looks like this, just kind of momentum selling. But when Chewy broke below 32 right off the open, and, you know, had a little bit of a spread to it. I think I remember the inside offer at one point being like, you know, 31.90 or something like that. I put a buy stop at 32. And if the buyers, you know, if they price corrected it with some volatility right away below 32, but then buyers came in and they buy this thing right back through 32, I was willing to take that trade. But when I saw this thing just continuing to sell off this first 5-minute bar, I was like, okay, this thing doesn't look right for me. I canceled my buy stop, and that was it. You know, eventually there was some bull flow, and it actually broke through 32 with a decent looking pattern in the early afternoon as the Fed was kind of going on. And that's when growth in general was also given really good relative strength, which probably helped this name. But it's like I'm looking at that, and then it's like, okay, you know, I'm no longer, you know, interested in this potential opportunity. It was similar with this GOLD. The GOLD got earnings today, and $20 is a big daily level. Gold's been really strong. I usually don't like buying day twos. It's a very common thing I talk about all the time. I want to be involved in the catalyst that creates the day one, and then still have a swing position into the day two for continued reward. So normally I don't like buying day twos, but I was willing to look at this even though it would have been a day two, specifically off the earnings report. I thought the earnings report looked pretty good. Gold's been relatively strong. $20 is a very clear daily level for gold. But I'm looking at it at the open, and I'm like, there's no volume, which is really kind of weird. And I don't trade this name. I don't trade Barrick Gold like day to day. I don't know it super well as I do other names. But the fact that off the open, the first 5-minute bar of the day had the exact same volume on the earnings report as it had yesterday was like kind of telling to me. So this just never looked right to me from you know, when I was looking at the tape and I was looking at the speed in which it was trading. Because the only way I want to take a day two trade, right? And what do I mean by a day two? Going over the daily chart, yesterday's day one. Yesterday, there was a great breakout through like 19 quarter or so that people could have been involved in if they were paying attention to it. Stock closes up at 1975, or you could also even look at GDX. GDX, you know, great break through 34 yesterday, probably very tradable. I want to be involved in the catalyst that creates the day one. I want to have GDX from 34. I want to have gold from 19 quarter. And then when I've got a 50-cent profit cushion at the end of the day and a $19 stock, I can hold anywhere from 10 to 50% of my position overnight, make it become a swing trade, and now I'm in a win-win situation, right? If the whole market gaps down, the whole market pulls back, I give back profit, and I end up, making a little bit of money, or if I was super greedy, just kind of being break even on it. But if the bull trend on gold continues, the market's supportive, if GOLD breaks through $20, I can still have that swing on that just continues to pay me dividends through day 2, day 3, then maybe I get the higher low that leads to, daily chart continuation. And that's what I really love to do more than anything, is find intraday risk that can be on a 5-minute chart or a 15-minute chart that can potentially become daily chart reward for me on a little bit of a longer hold if I get a good close on day 1. So I always want to be in that day 1. I don't normally want to be in day 2, but earnings. If you're involved in day 2, that means that you're buying a stock that's already extended. And that can be fine, because you can buy a stock that's extended and have it become even more extended. That's the definition of what momentum is, right? Momentum means the greater the price, the greater the demand. That's the definition of momentum, and it creates stocks that can go parabolic. It creates stocks that can just give continuation on day 2, day 3, day 4. We've all seen it. But you inherently, if you're buying day 2, day 3, day 4, have a worse risk reward and a lower probability of success, because you are relying on momentum actually being there to give it to you. And I don't normally like to rely on that. I'm not like a pure momentum trader. I obviously can trade momentum, but it's not necessarily my go-to. But if I was ever going to trade a momentum breakout for a day 2, it would be on an earnings report. So, then I'm just watching this thing at $20 off the open, and again, my charts are just super slow again. And it just doesn't look right. Volume doesn't look right, and I don't need to chase a day 2 if what is a prerequisite for momentum is volume. The way that you get an extended stock to become more extended, the way that you get high becoming higher or low becoming lower, is consistent, continued high volume, and the volume just wasn't there. It's like, all right, that's another one that is just going to be off my list. So you can scratch off Chewy, you can scratch off gold. I was really watching that XLE around that $80 area, but we know that it flatlined out at that spot. And then Airbnb was another one, looking at 120 off the open based on the daily chart, and that thing so fast off the open that there was nothing to look at. So that one comes off the list. AMD 84 ended up kind of being important intraday. SunPower 12 kind of ended up being important intraday. There may have been some trades for people if they wanted to be involved in those. I didn't get involved, but yeah, I don't know. Just figured it'd be worth it to spend 10 minutes here and kind of go over the thought process, because I publish this list as like a watch list each morning into the VTF. It is not a let's go absolutely 100% trade everything that's on this list. You still need to make sure that the right risk reward, probability of success, via layers of probability, which is what we try to look at, is all actually coming in. And again, that's all I got for you guys. So I'm happy to spend the next few minutes answering questions, and then I do want to end the meeting a little early today so that we can go over to Pat's conversation trader thing with Greta. That's going to be on LinkedIn. And again, if anybody's got the link for that, if they could post it, I think I might have it actually. I think this is it. That actually works. Yeah, I think that works. All right, let me see here on questions in the VTF, if there are any. We got some interesting reports here after hours. Qualcomm, Etsy, Mercado Libre. Solar Edge is up. Is that on earnings also? Yeah, this is Solar Edge. Looks like it's up pretty decent. I did not see those numbers. up 9% here after hours. Qualcomm, is it still selling off? Qualcomm giving some pretty conservative looking guidance here, which the market is not taking kindly to that. Yeah, Qualcomm trading lower right now. Looks like it's off like 5%. Melly I saw was trading up, and Etsy, the Etsy numbers look pretty decent. We also have Etsy trading up. I just don't know why my charts are so slow. The Mercado Libre, this stock is impossible to trade. I think it's an interesting one to look at, but it's impossible to trade. It's too thin, too expensive, and yeah, Etsy off its highs, but still up here at hours, back above $100 is notable. From Nick P, is it some sort of bond vigilante type situation with these Fed funds traders calling BS on Fed debt levels? I don't know. They've been consistently wrong so far. Whatever the Fed has said has been what they've been doing. From Bill, I might be wrong, but I think cuts are priced in because people think the Fed is wrong and it will be worse than expected. Like the recession is what I assume you mean. If the recession is going to be worse than expected, I'm surprised that the entire equity market's not down further. It's like that. I don't know, a little bit of a struggle to try to figure out, unless maybe second level thinking is that the big recession is what means that the market's holding up, right? A bigger recession than expected means that cuts come in faster, which means that the market can actually stay at these levels. This business is crazy. From GF, bond market thinks banking issues are worse than the market does, and that being a trigger for cuts. No info, just a hypothesis. Yeah, makes sense. Bill, I'm seeing your Wall Street Journal quote here. That's another one that got me a little bit confused on the day-to-day. Wage increases are not principal, I would assume a principal driver of inflation. I mean, the Fed spent a lot of time talking about the fear of wage spirals 6 months ago and what it could do to inflation. I guess, yeah, I don't know. That one doesn't really make any sense to me. I mean, from an economic perspective, the biggest wage increases have come to the people who, make the least amount of money, and the people who have the least amount of wealth have the highest propensity to spend that money. So, therefore, I would think that wage increases on, let's call it the lower middle class, or probably lower to lower middle class, is where the most amount of spending would come from, that actually would be a principal driver of inflation, would be my thought process. Personally, I think it's a good thing that, the people at the low end of the scale are actually getting some help here with some of these wage increases, but it's not necessarily a good thing for inflation. Takes away from the jobs number mattering as much. Yeah, really interesting. Yeah, and then right after earnings reports, including Apple. From Brett, Fed futures are now pricing in 4% by March 24. 125 basis points in cuts seems nuts. Yeah, that to me, completely crazy. Unless we're looking at 10 to 20 more bank failures, right? Which we spoke about, I think, in detail in yesterday's afternoon meeting. But yeah, it's pretty crazy. Pricing in 4% by March 24. So you're looking at 5 cuts. It's almost like a cut in every Fed meeting after June. Lemonade, I did really well on Lemonade when that thing was first IPOing. Did they report? They're up pretty big here after hours. I crushed that IPO on this first day. I bought like $50.10, and the next day I think I sold like 94 or something. I did really well with that one. And then I did pretty well trading a range in this thing. I don't remember. I think that was back in here in 2021 after the big initial sell-off. But then I just kind of stopped looking at it and stopped trading it as this thing went into this downtrend. I like the company. It was just overpriced. There might be some decent value here at $12.50. I'd like to see what the numbers look like. Might be worth getting involved in that thing again. Yeah, from Bill, they're pricing in cuts because there's no hikes, which is the most. I don't get it. I just don't get it. I thought that market participants as a whole were supposed to be smart, especially in the bond market. They're pricing in cuts because there's no hikes. Yeah, the bank failure contagion would be the one thing I could see if that gets really bad. That is where you could lead to cuts actually happen. But I still don't think that you need to do that. Oh, is PACW headline out right now? I think that instead of actually cutting, all you need to do is someone mentioned that there's going to be a program. Someone mentioned this morning there's going to be a program. Oh, getting smoked. Down 26%. That's not good. Someone I think mentioned this morning that there's going to be a program that starts in 2024 where these banks can get their treasury paper at, back to them at, 1-to-1 on the dollar at par, which I don't understand. Why don't they just do that now if they're going to do that anyway? That's all these things seem to really need. All right, well, we'll see. Maybe this will be the next fire here that needs to get put out. Thanks, Dave. What are your thoughts on NVIDIA trade? Almost out of time here. I want to wrap it up. What are your thoughts on NVIDIA trade with overreaction and sympathy to AMD trading down into 275? And holding it at 950. That's when I was looking at the long also. I just remember I can't get my charts to work. Absolute heck is going on with this computer I'm on. Yeah, so I was looking at the long here at 950. I didn't take it. I wanted this candle. I've been talking a lot about the 5-minute RDR trade for execution. It's been a trade I've been doing, for probably the last several months. It's been working really well. And that's what I was looking for here. Was this heavy sell-off in NVIDIA, 1, 2, 3 heavy sell bars. And the fourth bar, I wanted this to break the third bar's low and then snap back up. And I was going to look to try to buy this back through the previous bar's low, so 270, 272 versus whatever the low of that bar was. And it didn't happen. It just rallied right away, which was annoying. And then AMD was actually a good trade that our guest Dimitri here actually kind of put on the radar for me. I was just a little bit too late to type it up. Back through 82 on that quick little snap break. But yeah, NVIDIA, I like the idea of that long kind of coming in there. You get the inside candle that kind of engulfs that one that breaks up. My problem with that is, yeah, so you're mentioning that the risk looks like a lot. So this is a counter trend trade. And that's what it comes down to is I want to know what my risk reward looks like on a snapback to the 80 MA on the 5-minute, because on this counter trend trade, I think that's all I can actually expect is a snapback to the 80 MA. And I know with NVIDIA it overshot it, it worked its way all the way up to 280. Great, you want to have a game plan in place to maximize reward where you can try to capture that. I don't think it's necessarily what you can expect. I think what you can expect is a timer price correction to the 80 MA on the 5-minute chart. And then you need to analyze all right, well, if I'm looking to buy basically $296.90 and I got to give it to Lowe's, where I'm risking a couple dollars here, the reward to this ADMA is less than that. It's not. I don't like it at that point. If I could have gotten what I was looking for, which is the break of this candle and then a snap back through, and I could buy that, 20 to 60 cents risk, and then my reward potential is all the way from 275 all the way up to 278. Now all of a sudden that becomes a much better risk reward, and I like that better. All right, well, it looks like the hung up before our eyes, so not great. I'm going to end the meeting there. Pat is going to be doing this Conversations with the Pro Trader podcast, interview, streamcast, whatever we're calling it, at 5 o'clock. He tunes in for that, and that's it. I'll see you guys all tomorrow. Have a great night.